All right, good day. Hope that you're doing well. So in this video, we're going to be looking into an exam question relating to debtors reconciliation. And this, to be specific, is from your previous question paper, the 2022 November paper, right? So now, starting off with the first question, they say, okay, Adams traders, okay, so they're telling us that their year end is on 30 June 2022, and the business uses a markup of 40% on cost. Now, every time whenever I'm given my markup, I like to write down this formula. My cost plus my markup, this would be equal to my selling price, right? So as a result, my cost is always 100%. My markup in this instance, I'm given as 40%, meaning that my selling price, it will be equals to 140. All right. So now this is just a formula that I use whenever I'm given a markup. Why is that? For example, if I need to determine the cost price of something and I have the selling price, I would use this formula. If I need to determine the selling price of something, right, and I have the cost price, I can make use of this formula. 1.1, we need to prepare a correct debtors control account for 30 June, right, or for the June 2022 after considering errors and omissions. Now, show all calculations in brackets and balance the account. Now, let us use this. Oh, this was the previous account that they did, and this account, it had errors, and we need to rectify the errors in these accounts, right? So first, I'm going to transfer these balances to my answer sheet. So I'm starting off with my balance brought down, right? So 20 June, so the dates here is 20. So this is for 2022 June on the first my balance brought down. So let me just So I'm going to do my calculations here on the side for each and every line item. Now, starting off with my balance brought down, just in case it needs to be adjusted, right? So because I don't have enough space to show in my brackets on my ledger account, right? So my debtors control, my balance brought down balance that I'm given is 216,210. So this is my opening balance. Right. Now, let me see if there's any transaction that affects my opening balance. So here are my errors and omissions, right, that I need to take into consideration. Now here, the debtors control balance, right, this is our balance at the beginning of the year, 1 June 2022, has been overstated by 6.7. Now, because it's overstated, meaning that it's extra, we would need to reduce it by this 6.7. So on my opening balance, I'm going to subtract 6.7. Right. Now, let me see if there's any other transaction that affects my opening balance. So here it's for debtors allowances. Okay, and that was the only transaction that affects my opening balance. So as a result, my new adjusted opening balance, it will be 216,210 minus the 6.7. Now, punching that into my calculator, this should be equals to, so also if you don't have enough space, make sure that you show these workings on your answer sheet. This would be equals to 209,510. Right. Now, let me look for the other transactions that I'm given. Now, here, I'm done with my opening balance. So I'm gonna my sales amount, right? So I'm gonna do calculations relating to my sales here because I don't have enough space on the table. So I'm gonna also write sales here. So my incorrect, or basically the sales amount that may need to be adjusted, is 310,920. Now let me see if there's any adjustment that relates to my sales. Now, okay, this relates to debtors allowances. Now, a credit invoice for merchandise sold, right? Now, we sold to this person and this has not been recorded. Now, they gave us the cost price of this merchandise. Now, to give you a tip, everything inside your debtors control account, right, should be in terms of your selling price. So everything in this account should be in terms of your selling price. Now, because they gave us our cost price, it means that we're going to need to make use of our markup formula to calculate the selling price. Now, what is the cost price of these goods, right? 3.7. So here, I'm going to do my calculations here. So it's 3.7. And I'm going to multiply it by what I want always stays at the top. What I have must always be at the bottom. So what is it that I want into this formula? I'm looking for my selling price, and my selling price is 140. Now, this 3.7 that I have is my cost price, and my cost price is 100. Now, punching this into my calculator, I'm going to get the selling price of these goods, right? And this would amount to 5,180. Right. So my sales amount, I'm going to add 5,180. Now, let me see if there's any other transaction that affects my sales. Now, okay, so here, okay, I think that was the only transaction that relates to, because here, okay, credit balance transfer, now an amount. All right, this was corrected. Okay, that was the only transaction that affects our sales. Now, if they say something, it was recorded correctly in our subsidiary journal. Now, what is our subsidiary journal? Our subsidiary journal in this instance is our debtors control ledger account. So, meaning that if they say something, it was recorded in the subsidiary journal, it means that in the debtors control account, they took it into consideration. The adjustment you would need to make is the adjustment on your debtors list, right? So here, for my sales amount, I'm going to add these two amount 310,900, 310,920 and 5,180. And if I do so, my sales amount will amount to 316,100. So remember, this is from my DG, right? So let me just, so my sales amount is 316,100. Now, what is that other line item? So I'm done with my sales. So bank, which basically relates to our bank refund. So I'm going to write the amount. So the amount that I'm given here is 600. So here I'm going to say bank, right? So my bank, and here this refund. So bank, I have 600. Now let me see if there's any transaction that might affect the 600 rands. So here, okay, debtors allowances. We have already, we're done with that. Same applies to that. So, okay, I don't see any transaction that would affect that amount. So as a result, I'm going to record it as it is. So here, this is going to be 600. Now, my other line item, general debits. Now, to be specific, what accounts would affect my general debits, right? So if basically these, to be specific, anything that has to do with data being transferred. So transfers, transactions such as transfers, interest charged on our debtors, charged, these transactions would affect our general debits, and as a result, they would increase this amount. So if there's any transaction that relates to data being transferred, as well as your interest that you charge to your data, right? So this would affect your general debits account. Now let me go write my balance for my general debits that I'm given here. So here, general debits. So let me just write it here. General debits, right? And the initial amount that I'm given under my general debits, it was the 1,820. So now let me see if there's any transaction that would affect this general debits account. Right? So now here we have a transaction which relates to a transfer. Now, transfer of the credit balance in the debtor's ledger of P. Lope into his account in the creditor's ledger. So basically, this transaction would affect our ledger as well as our debtors list. Now, let me try and show you what do they mean by this, or basically what do we need to do in this kind of an instance. So now I'm going to first draw my debtors control account, because remember, this is where we represent our debtors. So this is an asset account. It increases on the credit side and it will decrease on the credit side, right? It increases on the debit, decreases on the credit. Now, here it's our creditors control. So this account is unnecessary, but then I just want to show you what actually happened here, right? Or what is it that we actually going to do with this information? This increases on the credit side and it decreases on the debit side. Now, here they're telling us that transfer a credit balance, right, in the debtor's ledger of P. Lope into his account in the creditor's ledger, meaning that this person had a credit balance. So as a result, we were owing him money because this account, it decreases on the credit side. So P. Lope, right, so I'm going to write P. He had a credit balance, right? So let me look at P. Lope. Okay, here's P. Lope. His credit balance is 1.8. Now, because we were owing him money, we can now no longer classify him as a debtor, but as a creditor. Hence, this balance, we need to transfer it to the creditor's control account, because why? We are owing him this 1.8. So what is it that you're going to do? First, you're going to need to cancel him out, right? You're going to need to cancel this amount off so that in the debtor's control account, his account balance is zero because he's no longer owing us any money. We owe him money, right? So we're going to cancel out this balance carried down 1.8. As a result, these two would cancel out and his account, it will be zero, right? Now, we're going to transfer him to the creditors control account. Now, creditors control account, it is where we show, it is basically that account whereby we recognize the people that we owe money, right? So because here, we would be owing him money, right? So this transaction is going to be on the credit side, right? Because we are owing him money, hence it would increase this creditors control account, right? So here, and this is the corresponding credit for this debit. So P. Lope 1.8. Now, basically, this is what the transaction, right, it's saying, and this is the adjustment we needed to make. Now, I want you to note something. As I've said, our main focus is on the debtors control account. So what is it that we needed to do in our debtors control account? We needed to cancel out this credit balance by doing what? By debiting it. And what happens to your debtors control account on the debit side? It increases. Now, this would give you a clue whether this 1.8 do you need to add it or subtract it on your general debits, right? Now, because the adjustment was done on the debit side and the debit side is a plus, it means that this amount we would need to add it on our general debits. Now, if this transaction was on the credit side and on the credit side it's a minus, it means that this amount we would have subtracted it on our general debits. Now, in this instance, this transaction is on the debit side. So as a result, this account increases on the debit side. We're going to add the 1.8, right? So on our general debits, I'm going to add the 1.8. And I always try to use that technique if whether you're not sure whether you're going to add or subtract the amount. I always try to do a ledger account, right? So hence, in this instance, this person had a credit balance, and the only thing I needed to do in the debtors control is cancel this account. Because why? He would be now transferred to the creditors control. So as a result, because I cancel this account on the debit side, and on the debit side, this is where my account increased, then I know that I would need to add the 1.8. All right. So now let me see another transaction which might affect my general debits. Here, okay, this was an amount. Okay, this was recorded in the journal. Okay, it's fine. So here, interest. Now remember, I said two main transactions would affect your journal debits, transferred as well as the interest that we charge on our debtors, right? Now, this person, J. Philip, whose account was 3 months overdue, right? We charge him interest of 5% per annum. Now, this is an annual interest, right? Meaning that this 5% is for 12 months because of this per annum. And remember, this person, his account was overdue for only 3 months. And we would need to try to determine how much would be the interest for these 3 months whereby his account was overdue. Now, how would I do that? First, I need to see how much J. Philip is owing me, right? So J. Philip is owing us 7.2, right? And also, this account or this transaction would affect your ledger as well as your debtors list because you would need to add this interest on J. Philip's account, right? So 7.2 multiply this by 5%. I'm going to get the interest that we charge him for 12 months, right? So 7.2 multiplied by 5. The interest that we charge him for 12 months is 360. Now, I'm only interested in the interest for 3 months, right? And how would I go about finding it? First, I need to find how much it's interest every month. So I'm going to divide this amount by 12. And doing so, interest every month, it's 30 rands. And his account was overdue for how many months? For 3 months. So I'm going to say 30 multiplied by 3. As a result, the interest that we're going to add into his account is going to be 90 rands. So remember, on this person balance, I would need to add the 90 rands. Now, on my general debits account, I'm going to add the 90 rands. Right. And these are my transactions that affect my general debits. Now, if I punch these into my calculator, I'm going to get my correct adjusted amount for my general debits, which should be equals to 3,710. Right. Now, let me look for other transactions. So you have your general debits. So now going to the credit side, we have bank and discount allowed. So let me write it here. I have my bank and discount allowed. Now, what transactions would affect this account? Your bank and discount allowed. This is if some of your debtors pay you, right? So if they pay you or you give any discounts, right? So any transaction that has to do with the debtor paying us or us giving any discount, it would affect this line item. Now let me try and see if I have any additional information that would affect. So this is my debtors allowances. Now this 400 was received, but this was recorded in the journal but not transferred to his account. So this would not affect our ledger because this was recorded. So here a receipt issued. This was recorded correctly in the subsidiary journal. And remember, I said your subsidiary journal is the same as your, in this instance, your debtors control account, meaning that this won't affect our debtors control, but then our debtors list. Now, an entry in respect of goods sold was entered correctly. So, okay, this won't affect our debtors control. The payment received from Y Putin was correctly recorded in the subsidiary journal. Okay, so this won't also affect our debtors control. So the amount, I'm going to recognize it as it is, right? So my balance here is 124,380. Now, let me look for other transactions or line item, my debtors allowances. I think I saw something on debtors allowances, right? So as a result, I'm gonna write it here. Debtors allowances. Now, what is the initial balance that I'm given on debtors allowances? 55,580. Now, let me see if there's any transaction. I think I saw one transaction relating to my debtors allowances. So, transaction 2. Now, the total for the debtors allowances column was undercast by 360, right? It was undercast by 360, meaning that in order to adjust this balance, we would need to add the 360, right? So here, my debtors allowances, I only need to add my 360. Now, if I do so, my adjusted debtors allowances balance would be equals to 55,940. So here, debtors allowances, 55,940. All right, now what other line item do I have? General credits. So let me see. So here on these transactions, so let me see here. This transaction, this was recorded in the journal but not transferred to his account. This would affect our debtors list. Same applies to this, would affect our debtors list. Now, all these transactions which are left here, they would affect our debtors list. So as a result, your general credit amount would remain as it is, which is 1.6, right? So general credits, and this would still be 1.6. Right, now let me balance off my account, right? So first, now here I can see that my debit side is greater than my credit side. So I'm gonna add all these amounts on my debit side: 209,510 plus 316,100 plus 600 plus 3,710. Now adding all these amounts, my total for my debit side to be 529,920. So remember this balance, you need to write it on both sides. So now to balance, remember your debit side must be equal to your credit side. So as a result, my balance carried down. So let me just write it here. Balance carried down, it will be this 529,920 subtracted to 1.6, subtracted to 55,940, and lastly subtracted by the 124,380. And if you do so, your balance carried down would be 348,000. Now remember, this balance carried down, it will be your opening balance for next year, right? So balance brought down next year, it will be the same amount, 348,000. And here also make sure that you indicate that on your date. So next year, 2023, at the beginning of the year to June, on the first, this will be your balance brought down, right? And this is your balanced adjusted debtors control, right? So as a result, remember this balance here, it should be the same as the balance on your debtors list. When you add all your debtors, right? When you add how much your debtors are owing you on your debtors list, you should get the same balance we got here of 348,000, right? Now let us try and prepare our debtors list. Now I'm going to start off with S. Tyler. Let me see the balance of S. Tyler that I'm given here. It's 80,000. And I'm going to try and see if there's any transaction that affects S. Tyler, right? So, okay, now this is the transaction. A receipt issued by S. Tyler for 19,800 cash received was recorded correctly in the subsidiary journal, but into her account, we posted it as 18,900, right? So this person basically paid us 19.8. And in our account, right, or in her debtors list, we said this person paid us 18,900, which is lower than the actual amount they paid us, right? So we would need to subtract the difference between the two into her account, right? So now if I take my 19,800, subtract it to 18,900, the difference between these two amounts would be 900, right? And in the debtors list, we undercasted this total amount by 900, right? And because he paid, we would need to subtract it, right? So here, minus 900. And remember, your debtors list would also increase on the debit side and decrease on the credit side. Same applies, it's the same as your debtors ledger. So now as a result, the new balance for S. Tyler, it will be 79,100. If a person is still owing us money, we recognize him on the debit side. So now the balance that this person is owing us is 79,100. Now Y put in, so let me see the balance I'm given with regards to Y put in, 74,800. And let me see if there's any transaction that relates to Y put in. So now any transaction relating to Y put in. So here, a payment of 12,000 received from Y put in. This was corrected. It was correctly recorded in our subsidiary journal, right? But it was incorrectly recorded in the account of R. Dyer. So basically here, we received 12,000 from Y put in. Instead of us subtracting it on Y put in's account, we subtracted it on R. Dyer's account. right? So as a result, let us do the correct thing. So first we would start by cancelling out this amount on Ardaya, right? So let me see how much my Ardaya is owing me. So Ardaya is owing me 66,730, right? And because Y Putin paid 12,000 and we mistakenly recorded it as his payment, we would need to add back the 12,000 in his account, right? So here I'm going to add back the 12,000 to rectify my mistake. Now on Y Putin, I would need to subtract the 12,000 because he paid and we didn't recognize it in his account. Now as a result, the new balance that Y Putin would be owing us is 62,800, and the balance that Ardaya is owing us, right? So it will be 78,730. Now G Kriegler. Let me see the balance I'm given with regards to G Kriegler. So here's my balance, 72,400. Now let me see if there's any transaction that relates to G Kriegler. So an amount of 400 received from G Kriegler via EFT was recorded in the journal, but not transferred to his account. So we would need to subtract this payment he made, right, of 400. And as a result, the new amount that he's owing us, it will be 72,000. Now, M Ahmad. Now, let me see if there's any transaction that relates to M Ahmad. Firstly, let me recognize the balance we are given with regards to him. So the balance that they give us, it is the 18,920. Right, so 18,920. Now, let me see. So, any account that relates to A Ahmad. Now, transaction two, a credit invoice for merchandise sold to M. Ahmad, so we sold to him on credit, has not been recorded by the bookkeeper, meaning that it was not recorded on the debtors control, of which we recognize it at the selling price, and it was not also recorded on the debtors list. Now, remember, the selling price of these goods, we've calculated them to be equals to, so let me see, this is the selling price, 5,180, so I would need to add that amount, right? Also remember your debtors list should be in terms of selling price. The same applies to your debtors control, right? So 5,180. As a result, the new amount this person is owing us now, it will be 24,080. Now, Pete Lope, let's see Pete Lope how much he was owing us and what is the transaction that relates to him. Now, Pete Lope had a credit balance, meaning that, okay, credit balance, oh, this is the person we transferred. Now, credit balance, we are owing him money. So as a result, it's minus 1.8. This is his balance. And to cancel this out, I would need to add the 1.8 because remember, we it's now transferred to the creditors control account, meaning that, as I've said before, his account on our debtors control on the on the debtors list is supposed to be 0. Right. Now, J. Philip, the balance that I'm given with regards to J. Philip, how much is it? So it's 7.2. And any transaction relating to J. Philip, yes, the last transaction, we charged him interest for 3 months. And as I've said, this interest we charged him, we would need to add it into his debtors list balance. Right. So here I'm going to add this to 90. And as a result, the new amount this person would be owing us, it would be 7,290. Now, lastly, T. Mako. Now, the balance that we're given is 18,000. Now, let me see if there's any transaction that relates to this person. Now, the last transaction here, an entry in respect of goods sold to T. Mako to the value of 30,000 was correctly entered in the debtors journal, but this was entered on the wrong side of his account, right? So, meaning that, okay, what do they mean by this? Now, every time whenever something is entered in the wrong side of a person account, in order to rectify this mistake, we would need to double that amount on the correct side. So basically here, when we sold something on credit, right, normally we would classify that on our debtors control account or debtors list in the debit side, right? But here in this instance, what happened is that this was mistakenly recorded in the credit side as 30,000. Now, to rectify this mistake, we would need to cancel out this 30,000 on the debit side. As a result, these two would be cancelled out, right? And now we would need to do the right thing after we have rectified the mistake. We would need to add the 3,000 into his debtors control account. Now, as a result, note what is happening here. these two are doubled, and this would be 6,000. Hence, I say to correct this mistake, we would need to add double this amount, which is 6,000 on his account. So here, plus 6,000. Now, as a result, the new amount this person would be owing us, it would be equivalent to 24,000. Now, when I add all these amounts, I should expect to get a balance. Also, let me just try and punch them into my calculator. This plus that, this, and this, and that. And I'll punch this into my calculator. My balance on the debtors list would be equals to 348,000. Now, can you see that this is the same balance that I got on my ledger, right? So these two balances are the same, right? So always make sure that your two balances are the same. Let's say maybe you found a balance which is not the same from your debtors control, but for the method that you would be writing two amounts which are exactly the same here, right? You would get a mark for that. So always make sure that your closing balance for your debtors control is the same as your closing balance on your debtors list, right? So now let's see what the next question is requiring from us. 1.3, we need to explain the following term. What is a credit term, right? Credit term is the amount of time a debtor is allowed to pay off his or her account, right? So this is the amount of time a debtor is allowed to pay off their account. Now, for example, if maybe you took stock from me, and as a result, I'm telling you that you need to pay off the amount you owe me within 6 months. Your credit term would be 6 months, right? Which is the amount of time I allowed you to pay off the money that you are owing to me. Now, what is a credit limit? Credit limit is basically the maximum amount that that a debtor is allowed to borrow from you, right? So basically, here's the maximum, right, amount a debtor is allowed to buy goods on credit. Credit, right? So this is the maximum amount that you can allow your data to buy goods on credit. So if I say that you can borrow or you can take stock on credit, but then you mustn't take stock which is more than the value of 20,000. 20,000 would be your credit limit, right? A total discount of 6,219 was allowed to debtors. Calculate the actual amount that was received from debtors in June. Now, this transaction relates specifically to that line item of bank and discount allowed, basically. Now, bank, it has to do with the amount that you're getting paid from your debtors. Discount, this is the discount that you give to your debtors, right? So as a result, every time you need to subtract your discount. So basically here we're gonna classify the amount we received from our debtors, which excludes the discount. So how am I going to go about doing this? So firstly, let me see my bank and discount allowed. So this 124,380, this is my bank total. And on this bank total, I already subtracted discount allowed, right? So this is my bank total that excludes, because remember, always you need to subtract this discount allowed. This excludes discount allowed. Now, basically here, they're telling us that, okay, for this year, what happened is that we gave a total discount of 6,219. Now, what is the actual amount that we received? So basically, I'm going to take this bank amount, which excludes all the discounts, or rather, basically, this bank amount whereby I've already subtracted all the discounts. So 124,380. And I'm going to subtract the total discounts we gave to our debtors, which is 6,290. And my new bank and discount allowed balance should be equals to 118,161. This would represent the amount or the actual amount we received from our debtors, right? And this is your new bank and discount allowed. So always on your bank and discount allowed line item, you try to always subtract your discount that you give to your customers, right? Now, the percentage of return by debtors is 17%. Provide two control measures that can be implemented to reduce returns. Now, basically, how can you reduce the amount of returns that you are getting from your debtors, right? So basically, you can improve the quality, right? So basically, if you're offering them higher quality product, so there would be less chances that they would return it. So here you can write improve the quality of our stock, Now, the last one, in order to improve the quality of your stock, you could check alternative suppliers, right? So check alternative suppliers. Maybe someone may you may have a supplier which is basically offering a better quality. Alternative suppliers. So when you reason, as long as it makes sense, you're gonna get a mark for it. But make sure that you don't go out of context. Now, any 3 points to advise the owner on how to improve collection from debtors. Now, how can you make sure that your debtors are actually paying you? So basically, you can offer discounts for early payment, for early payments. So this would encourage your debtors to pay you back, right? And also, you need to charge interest on overdue account, right? So these are the points on how to improve. So if you charge high interest on your overdue accounts, there would be less chances that your debtors won't pay you back. So you need to charge interest overdue account. And lastly, you can send reminders, right? So because some they may genuinely forget. So always make sure that you send reminder emails or send reminders. So, for example, if maybe they supposed to pay on the 20th of every month, at least maybe 5 days or 3 days before, on the 17th or the 18th, try to send them a reminder, right? Also, that reminder must include the amount that they would need to pay, right? So, send reminders. So, these are the three possible points that the owner could use in order to improve collection from debtors, right? And that will be all for this video. Remember, if ever you have any questions, always feel free to reach out. Thanks.